diving into tax deductions for the 2005 tax year, it's crucial to understand the principles that govern what can and cannot be deducted. The Internal Revenue Service, or IRS, allows deductions for ordinary and necessary business expenses. An ordinary expense is one that is common and accepted in your field of business. A necessary expense is one that is helpful and appropriate for your business. However, simply because an expense is helpful doesn't automatically make it deductible. When considering more creative deductions, it's essential to have a solid foundation and be able to justify them if questioned by the IRS. Let's consider the country club membership and golf expenses. Generally, entertainment expenses are heavily scrutinized. While it might seem like using a country club to acquire new customers is a valid business expense, the IRS has specific rules regarding entertainment deductions. To deduct entertainment expenses, they must be directly related to or associated with the active conduct of your trade or business. This means you need to show a clear business purpose for the entertainment and that you engaged in a substantial business discussion during or directly before or after the entertainment. Maintaining detailed records is paramount. This includes who was present, the topics discussed, and the business benefit derived from the event. Without proper documentation, the IRS is likely to disallow the deduction. Furthermore, there are limits to the amount you can deduct for entertainment expenses. Generally, you can only deduct 50% of the cost of business-related entertainment. This limitation applies to things like meals, drinks, and entertainment at sporting events or concerts. In the context of a country club membership, deducting the entire membership fee would be challenging. You would need to demonstrate that the primary purpose of the club was for business and that you used it more than 50% of the time for business-related activities. Even then, the 50% limitation would still apply to the expenses incurred during business use. It is advisable to consult with a tax professional to assess the specific facts and circumstances of your situation. Regarding snowboarding trips, deducting them as a business expense would be even more difficult. The IRS typically disallows deductions for personal travel, even if there's an attempt to tie it to business. To deduct travel expenses, the primary purpose of the trip must be business-related. This means that the majority of your time should be spent on business activities, and the trip should be necessary for your business. If you were to argue that snowboarding trips are used to network with potential clients or attend industry-related events, you would still need to provide substantial documentation to support your claim. This includes evidence of business meetings, presentations, or other business activities that took place during the trip. The IRS is likely to view snowboarding as a primarily recreational activity, making it difficult to justify it as a business expense. Moreover, the expenses must be reasonable and necessary. Even if you can demonstrate a business purpose, the IRS may still question the amount of the expenses. For example, if you stay in a luxury hotel or dine at expensive restaurants, the IRS may argue that these expenses are not reasonable and necessary for your business. Now let's explore some less creative but often overlooked deductions that might help increase your tax savings. Firstly, consider the home office deduction. If you use a portion of your home exclusively and regularly for business, you may be able to deduct expenses related to that space. This includes a portion of your mortgage, interest or rent, utilities, insurance, and depreciation. The amount you can deduct is based on the percentage of your home that is used for business. It is important to note that the home office must be your principal place of business or a place where you meet with clients or customers. Secondly, don't forget about deducting business-related education expenses. If you take courses or attend seminars to improve your skills in your current business, you may be able to deduct these expenses. The education must maintain or improve skills required in your trade or business, or be required by law or regulations to keep your license or job. However, you cannot deduct expenses for education that qualifies you for a new trade or business. Thirdly, consider deducting startup costs. If you started your business in 2005, you may be able to deduct some of your startup costs. The IRS allows you to deduct up to $5,000 in startup costs in the year you begin your business. Any startup costs that exceed $5,000 can be amortized over a period of 180 months. Startup costs include expenses incurred before you officially opened your business, such as market research, advertising, and travel expenses. Fourthly, review your vehicle expenses carefully. You can deduct the actual expenses of operating your vehicle for business purposes, such as gas, oil, repairs, and insurance. Alternatively, you can use the standard mileage rate, which is a set amount per mile that the IRS allows you to deduct. Keep detailed records of your mileage and the business purpose of each trip. Fifthly, explore deducting health insurance premiums. If you are self-employed, you may be able to deduct the amount you paid in health insurance premiums for yourself, your spouse, and your dependents. This deduction is limited to your net profit from self-employment. You cannot deduct health insurance premiums if you are eligible to participate in an employer-sponsored health plan. Sixthly, consider deducting contributions to a retirement plan. If you are self-employed, you can contribute to SEP IRA, Simple IRA, or SOLA 401. Contributions to these plans are tax deductible, which can help reduce your taxable income. The amount you can contribute and deduct depends on the type of plan you choose and your net profit from self-employment. Seventhly, don't overlook deducting business-related meals. You can deduct 50% of the cost of business meals as long as they are ordinary and necessary expenses and you are present during the meal. Keep detailed records of the date, location, and business purpose of each meal, as well as the names of the people you dined with. Eighthly, review your advertising and marketing expenses. You can deduct expenses related to advertising your business, such as online ads, print ads, and promotional materials. Make sure to keep records of all advertising expenses, including invoices and receipts. Ninthly, consider deducting professional fees. If you hired an attorney, accountant, or other professional to provide services for your business, you can deduct these fees. The services must be directly related to your business, such as legal advice, tax preparation, or consulting services. Tenthly, explore deducting bad debts. If you have accounts receivable that you are unable to collect, you may be able to deduct them as bad debts. To deduct a bad debt, you must have previously included the amount in your income and you must have taken reasonable steps to collect the debt. Finally, remember to keep accurate and complete records of all your business expenses. This includes receipts, invoices, and other documentation that supports your deductions. The IRS may request documentation to verify your deductions, so it is important to be prepared. Consult with a qualified tax professional for personalized advice based on your specific circumstances. They can help you identify all the deductions you are eligible for and ensure that you are in compliance with tax laws.